my all-time favorite Warren Buffett sayings is be fearful when others are greedy and greedy when others are fearful. And let me tell you, with all of the tariff tantrums from last week, people have all kinds of fear, whether it's for their retirement, their real estate, their stock portfolios. Fear exists in the marketplace. But let me tell you, when fear exists, this is where the money is made. And if you're looking at real estate, I'm sure you're reading the headlines that interest rates are in the 7% or close to the 7%, and that might be very scary to you. But if you've been pre-qualified within the last 6 months to 12 months, this isn't anything out of the ordinary, and many people are still qualifying at all-time high interest rates. And the reason they're doing this is because high interest rates offers a unique opportunity for buyers that are willing to purchase in this market. So the real opportunity here, when we're talking about buyers markets, happens to show up in what people pay for out-of-pocket expenses and what they're able to negotiate off a purchase price. So in a buyer's market, and you can look up these stats, 40% of transactions are actually being met with seller concessions, which means that a seller is willing to pay for closing costs, pay for temporary buy downs. They're also willing to contribute to repairs. If you look at what people are paying for their properties, you can see that there's anywhere between a 5 to 10% discount. And so what somebody will pay to buy a property with a 7% interest rate is actually substantially lower than a market where there are lower interest rates. And if you look at where the data lies, it's actually showing that you have 3 to 5 times the competition when interest rates get into 6%. And that's how you lose your leverage. So let's break this down into real numbers. Okay. So you're a buyer who's buying at 7% interest rates. You buy a house that's at $400,000. Your initial cash investment is 5%, which is $20,000 because your seller is going to pay for your closing costs. Okay. If you're looking at national averages, your appreciation is going to be somewhere around 4%. Most markets in Arizona are right around 5%. And so if you look at that in a year, you're going to get 100% return on your investment. And that's because real estate is leveraged on the value of the total asset and not just your cash investment. When you compare this to stocks or bonds, where yes, you get interest and you're actually seeing a dividend, it's nothing in comparison to the leveraged appreciation because you're just getting a return on your cash investment, so just the $20,000. So rates are high, guys, and I know that sounds really dramatic, but there isn't going to be some big neon sign that says buy now. And if you're looking for a real opportunity exists when you have less competition. So I want to break this down to you about what the market is actually really seeing. And if you follow economists like Logan Matashami, you will know that the mortgage market is up in applications 9% since the beginning of the year. And when we're comparing this market to transactions that closed last year, we're up 24%, which is way better than most economists expected. And the reason I bring this up is because people expected this real estate market to be really flat, practically no appreciation. And when you're looking at real estate as an investment, one of the benefits is the leveraged appreciation, right? So the fact that you can make a 100% return on your cash investment, which is your down payment and closing costs, in somewhere between 1 to 3 years has always been a big advantage. And when you're saying that a market is going to be flat and that the only result is going to be your utility, people become more discouraged from buying. And when we look at the numbers, we can see that appreciation, national averages are right around 4%. And for my market area, many homes are actually appreciating somewhere between, 3 and 5%. And so this is pretty huge when you're looking at whether or not to buy or not to buy. And so I want to break down what 7% interest rates do to give a buyer a unique opportunity in terms of leverage. So let's break this down. Right now, we are considered a buyer's market, which means that there is more inventory than the number of buyers able to purchase or that are willing to purchase. And so what normally happens in a buyer's market is that sellers have to sell their property, 1, at a discount and 2, with concessions, meaning that they're going to cover for repairs and they're going to cover for your buyer agent compensation or cover your closing costs or all 3. And so a buyer in a buyer's market will actually pay less money out of pocket to purchase their property than a buyer in lower interest rate markets that might have to cover, all of their closing costs, might have to cover their agent commission, and might have to cover the spread between what it's listed at and what they're able to buy it at because of competition. And just for reference, guys, at 6%, there's about 3 to 5 million Americans that can re-enter into the housing market due to qualification that are otherwise not able to purchase because they just simply can't afford the payments. So let's say you're buying a home at $400,000 with 5% down. In a buyer's market, that's a $20,000 down payment. So assume that the seller is going to pay for your closing costs in this scenario. That's somewhere around $10,000 to $12,000, depending on the interest rate. In a buyer's market, you could negotiate somewhere between 8 to 12, right? So almost all of it or all of it. In addition to, they are also willing to pay for your agent compensation, where in other markets, buyers have to pay for their own representation. So in a buyer's market, we're talking at minimum, right? And we're just talking about cash out of pocket, somewhere around an $8,000 savings. Now, in addition to the cash out of pocket, we're also seeing, depending on the market area, a normal seller's market is 97% to list price or above, right? In a buyer's market, we're seeing 90 to 95% of what the home is listed for as the actual sales price. So you're actually also getting a 5 to 10% discount on the price in addition to $8,000 to $12,000 in concessions. Now, if you compare this to the last seller's market, which was back in 2021, most buyers actually had to come out of pocket an additional $30,000. And that was really to bridge the gap on their closing costs and what they were willing to pay to buy the home above list price, and in some cases above the appraisal value. You never want to be caught up in a marketplace where you're having to compete against multiple buyers. So for those of you who are willing to purchase in a high interest rate environment and then potentially refinance later, you're going to get the best deal in terms of price, concessions, and have the most negotiation leverage. So to recap this video, guys, yes, interest rates are high. Yes, the headlines are scary, but the best real estate deals do not go to the people who wait on the sidelines. They go to the people who are willing to act when they have the least amount of competition. Warren Buffett, guys, is arguably the best investor of our time. And if his investment strategy has stood the test of time, what makes us think that we can time the market better? The time to invest is when others are hesitating, because by the time you feel ready, the opportunity will be gone. So if you are ready to be the smartest person in the room, I urge you to look at your budget and buy when your budget says it's ready. If you need help with that, my team and I would love to connect with you guys. The contact information will be below for how to connect with our team. So if you guys found this video helpful, don't forget to like, comment, and subscribe, and maybe shoot this off to a friend who's waiting on the sidelines, fearful of investing, who wants to take an opportunity just like you.